Very excited to welcome back Terry Papineau. The first time we talked, uranium was $30 per pound. Now, what is it, Terry? About?
It's sitting at a 86 or 85.50.
Boom. Okay, so the fundamentals have played out. Are you still 100% in uranium like you were back then?
Well, I've been going to therapy, and yes, I'm still 100% uranium, even though some people think that that's crazy. But I really have the conviction, and I think the fundamentals are better than ever. So and I know the sector quite well, so I'm quite comfortable with 100% allocation in uranium.
When we first started talking, it was a niche kind of backwater thing. A few people like you really understood the fundamentals and dove in. Now it seems like doesn't it seem like it's going to be the primary electricity source of choice for governments, at least in the West, going
It's
forward?
it's It certainly feels that way, and as I said, from the information tidbits or whatever piece of news comes out almost on a daily basis now, the Western countries, whether it be France or England or Canada that broke ground on an SMR in December, or the United States, it's like it's cool to be nuclear again.
Yeah.
And there's no big opposition, uproar, that might have occurred 4 or 5 years ago. And now it's like everybody seems to accept the fact that, and maybe we had to go through the wind and solar experiment and see what the results of that would be to get here. And I'm not knocking wind and solar. I believe there's a place for those sources of power. But there's I, unless you can build a dam on a river that doesn't already have a dam, the best source for base load 24/7 power is nuclear, and that seems to be just a stated fact now. It's accepted, and people are basically expecting it.
Right. So that's why I say, like, in the grand scheme of humanity, we're in the early stages of the mass adoption of nuclear power because just look over hundreds of years. Yes, you have hydrocarbons. Those are kind of new in the last few hundred years, actually. And then now the new paradigm could be nuclear, which is just unbelievable when you think about that.
Well, it certainly seems that way.
Yeah,
And from all of the announcements that we just covered, I mean, if the politicians and the governments and some of the companies do what they say they're going to do, like I said, even if it's a quarter of that occurs, it's going to skew the original supply demand models. There's just going to be more demand for nuclear power, which means more demand for uranium.
exactly. So then the big question on everyone's mind, because people hear this and they get really excited, but then it's like, so like, but my junior stocks haven't budged yet, you know? So like, what is your thesis for junior uranium miners? Because if this plays out, it should be really good for them, you'd think.
Yeah, it should. And let's just be a little bit more precise when we're talking about juniors. People know this because they've heard me say it quite a few times already, but most of my portfolio is in exploration companies.
Right.
So a lot of these companies are trying to find uranium. Some of them have hit uranium in some drill holes. But I mean, there's no new mother lode deposit that's been discovered yet. So that's the majority of my investments are in speculative stocks like those. I sort of qualify the juniors as the developers. Some of the companies that have a deposit and they're trying to move that deposit to be able to produce uranium. So, and to answer your question in terms of yes, I believe that the juniors, although some of the bigger developing or development companies have moved in line with the price of uranium, it in a, I was actually expecting the more speculative stocks that I'm in to lag. I think that if you look at other natural resource markets or bull markets, You've got your major names that move sort of in line with the commodity itself. And then as more money enters the space, then it trickles down into the juniors and the more speculative names that I'm talking about. So they normally lag. So it's been a test in patience because we've seen some, especially last year. Last year was a great move in the second half of the year for the price of uranium. We started the year last year, the price of uranium was $50 a pound. I'm talking about 2023, and it ended the year at around $90 a pound. So that's a great year by any stretch of the imagination for a commodity. And some of the bigger names moved in line with that, but a lot of the juniors and the exploration companies did not. So, we need more uranium. There is a lot of uranium out there, but it needs to be discovered, and these deposits need to be uh, in a way, or you need to be able to, mine the deposits. So, if those exploration companies that are looking for that next deposit, the windfall could be substantial. And I think that there are some quality names out there, and I think that when money starts to trickle down into the smaller names, I think that these stocks will move as expected.
Interesting. So it seems like the most opportunity could be in the juniors because, yes, Cameco has gone crazy on the big pump. Like, I guess that's what you're saying. Like, the price goes up, Cameco skyrockets. It gets kind of expensive on a price to earning ratio, but then the juniors lag. But are you pretty confident that as the world scrambles and needs uranium, these juniors are gonna, I guess, have to go up in price? I don't know. I guess like what's the trigger to get these things like really, really skyrocketing?
Well, I think that right now, I think that we're kind of in a lull, a real lull,
Yeah.
um, especially following the Russian uranium ban.
Hmm.
I think that, and also the fact that the price of uranium rose substantially last year. I think that the utilitarians are you know, like a deer in the headlights kind of thing. Okay, what's going on here? I think that the some of the utilities have not yet accepted the fact that the producers and the developers are now in the driver's seat. And the utilities have had it pretty easy, and it really didn't care about the developing companies or the producing companies. They sourced their uranium wherever they could get it cheapest, and now they're kind of going, well, wait a second, like we can't get that anymore. But they're kind of expecting the producers and the developers to sort of say, hey, yeah, these are our high prices, we'll bring our prices down. I'm sorry, but they're in the driver's seat right now, and I think that the utilities are kind of just digesting that. I think that also uh, we're going to see it's an absolute necessity. We're going to see more heavier contracting once they realize, okay, I don't have a choice here. I need to sign these contracts at those terms. The longer I wait, the more those prices are going to go up. And I mentioned that before, but it's going to be a situation where, you know, some of the utilities, if they wait too long, then they're going to get caught red-handed, so they're going to have real issues. So we're going to start to see more contracting. It's been a very, very quiet term contracting year compared to last year. Uh, that's going to start when these terms start coming out with the prices. I think that the general sort of investing world is going to take greater notice and start to say, okay, there's something going on here with nuclear and uranium. And I think a lot of money is going to start pouring in. And, because we need the uranium,
Yeah.
there's going to need to be investments to find new deposits that can be mined. in a cost-effective manner, which you need more exploration. So I think that, yeah, I think that with time, and with more confirmation, I'm going to use that term. Like, we've been talking about this uranium situation for quite a few years now, and I think it goes in one ear and goes out the other, but we're getting confirmation of that on a daily basis,
Yeah.
and it's playing out like we saw, like we thought it would be, like we thought, well, actually better than what we thought.
Yeah.
And I think that, money will trickle into the exploration and the junior uranium juniors.
Right. Trickle in. And well, it almost has to, just based on the trajectory of things. That's what's really interesting.
Well, and if you look at some of the prices of these companies and some of the market caps, like, let's just try to examine, where we are in this thesis. In the fall of 2021, we had a great run up in the price of uranium and in the price of some of these companies. Well, some of these companies are sitting at the same market caps as where they were 3 years ago.
Yeah.
And the situ and the scenario now is way, 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 way better. So I mean, at some point in time, people are going to realize that money's going to come in, and we'll be rewarded.
So that's where the deep value probably is in the space, is these exploration companies, which are they're not getting any premium whatsoever right now, it seems.
The only time they get, they get something, and it's funny. Yeah, you see it. It's anytime news comes out. And sometimes the news is good and the stock gets hammered anyways. It's just, there's no logic to it. But yeah, I think there's value there. But you talked about Cameco at a high valuation, but I think that's a great business. I think that company is going to be a cash cow,
Yeah.
like cash cow.
Right. That's true.
Starting in 3-4 years from now, when their order book is full, and when they start signing new contracts for deliveries later on at higher prices, they're
Yeah.
going to be making money hand over fist.
That's a great point. Yeah. It's just maybe there's some premium on them now, deservedly so, right? Because it's going to keep growth is all that matters. That asset's going to keep growing. But then the exploration. So you have a diversified basket of micro cap explorers. Is that the strategy still?
Yeah, I'd say probably 70% of my portfolio is in exploration companies.
Okay.
And I also have one developer that's now started to produce.
Okay.
Then I have a past producer that's now started to produce. And I have also two development companies in Africa.
Wow. So 70% in explorers. So
Yeah.
that's bold. But you got to be bold if you're, I mean, it's never.
Well, my thought process, and I hope I'm right on this, but my bet was, I looked at the 2007, situation where there was a bunch of exploration companies sitting at valuations of 300, 400 million market caps in 2007 that had no uranium, that had no deposit. They just got buoyed up because so much money came into the uranium sector. So I figured, I was looking at when I started deploying my cash, the market caps weren't at 30, 40, 50, or 60 million where they are now. They were at 8 million, 10 million.
Right.
So I figured, if I could find, like 10 good quality exploration companies, and sprinkle my money in those 10, then and the thesis plays out like I think it's going to play out, then these market caps are going to go up, and I should do fairly well. At the same time, I was hoping that one of them would find something. And actually, there's four of those explorers that have actually found uranium. So my best success was ISO Energy. When they hit their deposit, and there's three others: Baseload, Canalaska, and what's the four? Oh, F3. That have hit significant, good news.
Yeah.
So, if they can prove out that they have something, then, that's going to be another home run.
Yeah.
But so that was my strategy. If one of them can find something significant, then, it should be a big home run that might mitigate some of the losses that I have.
Yeah.
So that was my strategy.
So, that makes sense because we've already seen before when the world was, I think the world was excited about uranium back in, or nuclear energy back in 2007. The world
Yeah.
was excited. They thought maybe this is the fuel of the future. Then we had that accident. Then we had the winter. And now the world's even more excited than it was before. So why wouldn't the stocks behave the same way eventually?
Well, one of the reasons also why I think it's lagged is because there have been other areas that have done so well. Like if you look at some of the tech stocks, like,
Yeah.
you just put your money in it and forget about it, and they've done so well.
Right.
At some point in time, I think that investors are going to want to find the next Nvidia or the next Apple or the next whatever the name of the company might be. And I think that some of these uranium names and the uranium sector uh, will benefit from that.
Well, especially because it almost is an AI play at this point. It's needed for artificial intelligence. Because have you seen how huge the projections are for the power needed for these AI data centers, and how if you want good AI, you need more data centers. So it's just like I think Amazon's doubling its data center growth. Like it is an AI play at this point. So
And that didn't figure on anyone's thought process when you were looking at the hypothesis, in 2016, 17, 18, to think that, companies would seriously consider, building an SMR or whatever to power that's only started like recently.
yeah,
And it's going to happen. I know it will. We just need, the like TerraPower they started building their SMR. But once we have these up and running, and people see that, that you can build them cheaper and more efficiently, and the- it's going to grow, and
right.
it's going to create way more demand on uranium than the traditional supply demand scenarios showed 4 or 5 years ago.
Right. That's why that guy said it's like oil in the 1950s because it's the brand new fuel, totally undiscovered. I think what we're saying is that the market is sleeping on these early
Yeah,
stage players that
yeah,
control.
and if you look at it, I listen to everything
Yeah.
related to uranium, but I was listening to an interview with John Chimpaglia from Sprott this morning, and he was explaining that he's talking to, a bunch of big investment, firms and companies and funds. And, the guys that they're still clueless about the sector. And, so once I think we get more confirmation that this is, it's not just Mike Alkin or a bunch of people saying this, it's actually happening. Money is going to come into the sector, more money.
Yeah, and Wall Street's already figuring it out too. Like buy rating on Cameco, they're already
Yeah,
starting.
yeah, yeah.
Okay, so then now we're in kind of this lull period, and people do want to know if the supply demand fundamentals are so great, why is the price not moving? And it's because I guess you're saying it's all about the utilities driving the price in terms of their contracting cycle, right?
Well, there's a couple things at play here. Like there's the spot price, it kind of I don't know, drives sentiment in the sector. Let's put it that way. And I think the spot price has consolidated here at around the 80, $90 range for a while.
Mhm.
I don't think it's going to stay there. I think it's going to go higher, hopefully this year, but we'll see. But again, once we start to see the rise in the spot price, once that starts to rise again, that's going to create more interest in the sector, I think. But the what's going to really sort of provide major confirmation is when we start to hear more news related to contracting and bigger contracting numbers. And I think that, that's especially with the US utilities, I think they've been lagging. They've certainly been lagging the European utilities. But, once we start to see more contracting, more pounds, higher prices in term, it's going to confirm and it's going to start to drive, equities up again.
Yeah, that makes sense. And a lot of what we're talking about, like the data centers, the SMRs, that is years away. So we're still kind of, I don't think that many years away, but like maybe is it 5 years away at this point? Like 2030 is when they're going to launch the first one. That's exciting. But
Yeah,
and then yeah, sorry.
yeah, I think you're right about that. And like I said, we're going to have one or two or three or four of these SMRs start to pop up, and
Yeah,
then and then I think it's going to start to really gain momentum after that.
right.
So, so that's going to place more. It's going to create more demand for uranium, especially like let's say starting in 2029, 2030, around and beyond. But what's also great about that is that it's extending the bull market. Uh,
Yeah. Oh yeah.
you know, I like I said in 2016, nobody had this on their dance cards for uranium. I was expecting, the theory to play out in about 3 to 5 years. I was wrong on that. Uh, it's okay that I was wrong on that. How? Because the theory is way, way, way better now, and it's going to last. Like I think this is going to be a long bull market, way longer than what I thought at the beginning, and way better.
Exactly. And so what we have now is like you said, a lull, and part of it's maybe the macro environment isn't like there isn't a lot of money pouring into other areas than the big tech monopolies right now, and interest rates are high, but then also the utilities haven't really picked up their contracting. But like once they do start that, it's going to lead into this multi-year growth in.
Yeah, I really think so. And the catalysts are going to be like the Cameco conference calls where they'll announce we've signed so many contracts for so many years. Our order book is full. And then, when Kazatomprom gives us guidance on their production in August, again, it's going to be a signal to the market. People are expecting their production to be lower.
Right.
So, we'll see how that plays out. But yeah, that's really what I think is once we get more contracting, more confirmation with that, I think it's people are really going to start to take notice because I don't, unless there's another geopolitical event, which I hope doesn't occur, but they have to start signing contracts now. We're starting to get at the critical stage here, I think.
Interesting. So what makes you think we're at a critical stage where they have to start? I mean, I understand there's a time factor where they burn through it, so they need more, but what makes now specifically, or like in the next few months and years, kind of a time where they need to really get more of it?
Well, because what I believe, and I talked about a little earlier, is that Cameco can only produce so much uranium from their mines in Canada. And NextGen, they haven't built their mine yet, and neither has Fission, and Denison Mines has not started producing yet. And you've got Global Atomic that's working towards production, but they're not producing. So if they wait too long, and it takes a long time to bring these mines online, there is some past producing mines that could be reactivated, but that takes money, it takes time, it takes. So at some point in time, if if they wait too long, there won't be any production. There won't be any uranium available, and they're
Right.
going to be stuck,
Yeah. Yeah.
having to pay ridiculous prices to be able to buy the uranium that's available for their needs.
Right.
And so, the longer they wait to procure those pounds, the more that they're placing themselves in that possible scenario. So, yeah,
Got
I don't
it. Yeah.
I don't know if I answered your question there, but that's my reasoning.
No, that makes sense. Yeah, because the supply just gets tighter and tighter as Wall Street firms take it offline and yeah, and
Yeah,
there's also
Cameco's contract book is almost full already.
right.
It's full for the next few years. They might have availability for delivery of pounds later, but once Cameco, sells all of its 2029 production, 2030 production, 2031 production, well, then, if you need pounds at that period of time, who are you going to turn to? And so if these mines, like for example, NextGen's mine, if that's not into production at that time, and the other thing is NextGen, for them to be able to build their mine, they're going to want contracts. They're going to want assurances that they can sell the stuff. They will, but what I'm saying is they'll have started signing contracts as well. So that all of that production that's going to come online is needed. The longer it takes to bring that production online, the higher the prices are going to go. And uh, you know, the, the more we're going to need newer deposits as well. So
Right. Right. That, no, that makes sense. And that's why you, like you said at the beginning, that the producers are in the driver's seat now, not the utilities. You could just get it whenever they want. And now it's like kind of it's they got to be really strategic and think about like the hyperinflation and the price of uranium.
and that's what I'm saying. The longer they wait, the more that scenario can occur. People. I remember when I started my research. We used to say back then, or people used to say back then, $70 will be enough to incentivize new production. $70 a pound. Well, some mines have opened, a few of them have reopened, but that's only going to produce maybe 4, 5, 10 million pounds a year. You need way more than that. And 85 or $86 a pound is not enough to incentivize that extra production that's needed. And, the longer that it takes for the price to get that, like these mines are not built just overnight. It
Right.
takes a lot of time, a lot of permitting. So that's why, and that brings me back to that's why I think we're at the very close to the crisis line where
Right.
we're getting close to it.
Yeah, because even if the price is enough to incentivize new production, there still won't be enough. So,
We need more, like the known deposits and the known mines that we could bring online right now and that can be built. All of that production is needed to meet 2030 and beyond demand. We need more than that, because
right.
Kazatomprom themselves said the world is going to need two more Kazatomproms by 2030. And we're 2024 right now. We're going to be in 2025 pretty soon, and it takes a long time to build a uranium mine. So we're at that critical stage here.
Yeah, and then the big elephant in the room is the US government. Are they actually, I know they're just pumping money into the US supply chain, but are they buying uranium as a reserve? Are they doing
They
anything like
did last year. They purchased and they had announced that a few years ago. That might have been under the Trump administration, but where they plan on doing that. But it was formalized in the Biden administration. And last year they did. They bought domestically produced uranium from, I think it was three uh, uh, companies in the U.S. that had pounds available, three
right?
or four. So, and there's the, if I remember correctly, there was the, this was supposed to occur over the course of a few years. I don't remember the exact details anymore, but so if I remember correctly, there was a possibility that they could do it like this year and next year. But they've come out backing nuclear and the uranium fuel cycle in a big way.
Yeah.
Just recently they signed there was a law that was passed where $900 million is going to go towards speeding up the approval process for companies that apply to build new nuclear reactors or SMRs.
Yeah.
So hire more staff, make it easier, reduce the price of the permitting process, all that kind of stuff. So the US they're putting their money where their mouth is,
Yeah.
and they're backing the domestic nuclear and uranium fuel industry.
Right. It
So,
doesn't get better, really.
and like I said, nobody could have foreseen that in 2019, 2020, that the
Yeah.
US government would come out in such a big way behind nuclear and uranium. So
Right. So it's exponentially better than it was a few years ago, but the prices are still around the same level in some of the really kind of micro cap stuff.
the, the,
That's
the price of the commodity itself did well.
yeah, yeah.
And the bigger names like the Camecos and some of these developers and past producers have done also very, very well.
Oh yeah.
But a lot of the micro and the explorers are still at the same levels or below levels where they were in the fall of 2021.
Right. It's
With
just
the price of uranium, back then the price of uranium was 50, 55, $60, right? We're sitting at $86 right now with better fundamentals, and the prices of some of these companies is still lower than what it was at that time in 2021.
yeah, and all their leases are valuable and the land is valuable and like the equation on if they're going to be profitable and if an investment would make sense keeps getting better because the bigger the return on investors' capital. So deep value, it seems.
Deep value, but it's speculation.
Well,
You
yeah.
know,
Yeah.
it's risky.
Oh yeah. Because you got to trust the company, the team, and are they going to dilute shareholders? There's lots of variables. Is diversification your weapon against kind of like just to offset some of the risk?
Well, which is why I also, invested in three developers and one past producer.
Mm,
And two of those companies have now started producing. So, and my two US names, I think they're going to do very, very well. They've already done very well.
mhm.
So, and I think they're going to keep doing better. So that was kind of my diversification strategy, also going into sort of a basket of exploration companies where, yeah, one or two of them might not do as well, but if I have one or two that do very well, then it's going to offset. And it's worked so far. Like, since I've started deploying money in uranium, I've definitely, my portfolio is worth quite a bit more than when I started,
That's great.
even though I've got a couple losers in there that I've not done well at all.
Right.
So it's worked so far.
That's awesome. Well, super
Yeah.
exciting. Yeah. Anything else you want to share? And if not, where can people go to find you?
Well, I'm on X, and a lot of people reach out to me there. I know I think that's about all I wanted to say. Just again, fully invested, fully committed, really, convinced on the thesis and the fundamentals, and it's played out like exactly like we thought it would, even better. So yeah, I'm still there.